how can you compete with Bank of America? How can you compete with the Royal Bank of Canada? Truth is, I can't. And they can't compete with me either. I'm a sane, living, breathing human being. I'm starting another bank. I don't think I can lose. If we assume that the comptroller of currency isn't listening to this interview and deigns to give me a bank charter, we hope we'll have a bank charter in June or July.
Hi there, I'm Bronson Hill, and I had the chance to interview the amazing Rick Rule recently, who's become a friend. We did a panel with some amazing individuals, and you may know Rick from just his presence the last 40 years, over 40 years, really being an influence for precious metals, other physical commodities, just really been a great voice of reason, a great teacher, I think, these days of all of us, just teaching us who haven't been through multiple cycles and haven't had 40 plus years of investing experience. So just an amazing guy, but he gets into his plan for what he's doing with his wealth. And one of the things he gets into, it's a little curious, he says, I'm starting a bank. And then he says this is actually the 7th time in his career that he has started a bank. So if you're like me and you have not started a bank and you're interested, man, how do I work with Rick and how do I get involved with his bank? We're going to jump into it. I think you're really going to like this interview because he gets into some things that he's doing specifically to prepare himself for what's to come.
And they began to put a little money into an asset class that historically has saved investors like them from circumstances like this. It seems to me not unlikely that the market share for precious metals would revert to the 3-decade mean. If that happened, then demand for precious metals and precious metal securities would double, triple, or quadruple. I have no idea what price level you'd reach if demand doubled, tripled, or quadrupled. But I actually suspect in my heart of hearts that I'm going to find out. The second thing that I'm doing with my own money, and this will strike everybody as really strange, is I'm staying liquid. I understand perfectly that cash is costing me mightily. The idea that I'm investing, if that's the right phrase, I'm minimizing risk in very short duration obligations means that I'm losing 6% compounded. But I believe that I have to stay highly liquid because I agree with the other panelists that we're going to see a lot of volatility. And I have learned during periods of a liquidity squeeze that if I have cash and I have courage, I can take advantage of the circumstance rather than being taken advantage of by the circumstance. Unlike most other investors, I remember 2008, 2009 very, very fondly because I went into 2008 well prepared, lots of cash, and as a consequence of the cash, I had courage. And I was able to buy things at prices that were unfathomable to me. And my suspicion is that the money that I'm losing as a consequence of negative real interest rates is an option premium. I believe that having the cash will give me both the tools and the courage to take advantage of a circumstance where a sell decision will be made by a margin clerk, not by an investor. And I hope to be on the backside of that trade. The third thing I'm doing, which is really incongruous, is for the 7th time in my career, I'm starting a new bank. I mean, it's a really completely crazy thing for a 69-year-old retired guy to do, coming into an odd financial circumstance. But I don't talk to any investor in my network, and I talk to 68,000 of them pretty regularly, who's happy with their bank. And when I look at banks, the way they're making money right now is on the carry trade. They are buying a 10-year treasury yielding 1.7, but it's a 10-year instrument, and they're funding it in the overnight market. So they're paying 25 basis points in the overnight market and getting 150 basis point carry. That works well till it doesn't. If the overnight market seizes up or if the short-term rates go, these guys are insolvent. People always say, Rick, are you out of your mind? How can you compete with Wells Fargo?
Okay, so if you're paying attention, Rick talks about what he's doing. He's doing 3 things, and these are things that he's done, but he's doing them a little bit differently now, right? He's purchasing commodities, he's holding commodities such as metals, uranium. He gets into coal in a little bit, which is really interesting. And then the next thing that he's doing is he's holding cash. And even though there's a high cost or a high value to hold cash, if inflation is high, it's hard to hold cash, right? Because for every 100,000 you hold, if inflation is 15%, you're losing $15,000 a year. Ouch. So he's holding cash to wait for opportunities as they come available. I've heard other people such as George Gammon and some others say that they're trying to hoard cash as well to be ready for particularly when commodities become a better value. The third thing that he's doing, and this is probably why you're watching this video, is that he is starting his own bank. And it's the 7th time in his career he's done it. He actually sold one of these banks in the past for $28 billion. So just a wealth of knowledge. He talks about why he's doing that and even how you could potentially work with him in the future.
How can you compete with Bank of America? How can you compete with the Royal Bank of Canada? Truth is, I can't. And they can't compete with me either. I'm a sane, living, breathing human being. I remember, when I backed these guys in 1999, 2000 to build EverBank, everybody was saying, "Are you out of your mind starting a bank, especially an online bank?" Yeah, probably. It ended up being a 30x for investors. We ended up building a $28 billion bank, sold it to TIAA-CREF. I think this is a wonderful time to build a bank because all the bankers that we're competing against are people that have had their expectations set in a different era. And I think that era is coming to an end. So I'm heavily invested in precious metals. I want the price to go lower because I want to buy more. I'm heavily invested in other aspects of natural resources, particularly in the oil market. The oil stocks are priced like oil's at $45 a barrel, and it's at 80. Everybody seems to believe that Ms. Thornburg is going to keep them from driving their cars next year or something like that. Ain't going to happen.
No.
So I'm heavily invested in a range of natural resources. That's a bit risky because if we do have a recession, although supply and resources will fall, demand will fall quicker. So my sort of broader resource bet, my copper bet, my nickel bet, my uranium bet, well, I'm going to be right in the long term. I might be really, really, really wrong in the short term. And against everybody else's common sense, I'm starting another bank. I don't think I can lose. If we assume that the comptroller of currency isn't listening to this interview and deigns to give me a bank charter, we hope we'll have a bank charter in June or July. The name of the bank will be Battle Bank. You can go to battlebank.com. That exists now. And we'd love to talk to you. Among the things that we have done and will do again is lending against people's physical precious metals holding. We know physical precious metals holders as people. We're happy with the collateral. We've done precious metals lending for many years. So I'd love anybody who cares about the bank, either as a depositor. We aim to be in the top decile of deposit interest rates in the market, or as a borrower, as long as we understand the collateral and we understand you. We'd love to have a discussion. It'll be called battlebank.com. My hope is that it'll be chartered in June or July.
All right, so you heard it. Rick Rule is starting a new bank, and it's going to be called battlebank.com. You can see it here. You can actually go to the website. You can reach out or send them a message, and they're kind of gearing things up for mid-2022, likely June or July. So check that out. And I love how he said, I can't compete with Bank of America, but Bank of America also can't compete with me. So the idea of very few people these days are happy with their banks, and to be able to provide services and things that be helpful would be really good. This next section, he gets into some of the stuff that he's looking into today, particularly coal, C-O-A-L, and just what it looks like to use this energy. Now, it's an out of favor energy because it's considered not a clean energy or not something like electricity or solar, but it actually does burn pretty clean. And these plans, these ESG, which is the environmental, social, and governmental, I may have butchered that acronym, but it basically is the plan to become more and more green by 2030 has pushed out coal. So a lot of pension funds and things from universities and other funds cannot actually invest in any energy unless it's clean energy. So there's actually been a delisting of coal on a lot of major exchanges and ETFs. So he says this is a really good thing. So see what he says here.
The fact that they closed the ETF is really good news. It means that coal is deeply out of favor. Many people don't know that the third best performing commodity asset class in 2021 was coal, allegedly a dead asset class. Many people don't know either that the highest demand year that coal has ever enjoyed was 2021, a dead asset class. You need to do some research because the most important producers of coal are in a situation where coal isn't very important to them, which is to say very large multi-commodity mining companies are the largest and lowest cost coal producers. It's tough to find a pure play in coal. There are some, Peabody, Arch, Colonial, there's a range of them. You need to understand that if you buy them, you're buying the second-tier companies. You're buying second-tier companies at probably a 50% discount to the net asset value of their future cash flows at today's commodity prices, which is to say they're stupidly cheap. And they're also fairly well-mannered in the sense that they're generating tremendous free cash flows, and they're giving that free cash flow back to their owners, which I think is a very good thing. One example of just how cheap these things are and how good George's instincts are, Glencore, a major multinational mining company, bought one of their partners out of a very large coal mine, probably 30 years reserves, and they paid 1.5 times free cash flow for half the mine. In other words, they're getting what, a 45% earnings yield on the purchase. And they're getting a 45-year earnings yield on a mine that's making about $1 million a day. It's not an insignificant asset. That'll tell you just how out of favor coal is. But you'll need to do your own research there.
Okay, so you heard about coal and why Rick likes coal. And I think there's definitely a case for it. You should look into it. Now, this is the part I probably value most about this interview. And basically it's like, hey, what should I be doing? Or what are ways that I can educate myself to become a better investor? So he gives 2 amazing book recommends here.
Well, I in fact developed an edge in my 20s, and mercifully I've stayed in the same business all that time, which is probably how I've come out okay. In terms of more general discussion, I mean, the first thing I do is have people re-listen to what George just said about an edge. But in terms of general investing knowledge, I love books. I would start with Economics in One Lesson, the old classic, to learn about how the economy actually works, as opposed to the way that you're taught that it works. It's a simple book. It doesn't take much skill to read it, and you learn a lot from it. The foundational investment book, from my viewpoint, is The Intelligent Investor by Ben Graham. Almost 100 years old. It's older than me. Nothing really has changed since he wrote that book. It's the best investment book ever written relative to the effort required to read it, which is low.
All right, so as we're wrapping up this interview, he gives 2 recommendations. He says, check out this book, Economics in One Lesson by Harry Hazlitt. I just finished the book. It is phenomenal. He also recommends Benjamin Graham's Securities Analysis, very thick book. I've skimmed it. I don't know if I've fully gotten to every part of it, but it's something to definitely evaluate and consider as you go forward. So hope you enjoyed this video. We do multifamily investing really to try to help investors pay less taxes and hedge inflation. So just as people invest, and I'm a metals investor, I do a lot of real asset investing. By owning assets that we can use debt for, we're able to hedge inflation over time. So if you're interested in hearing about that, you can just check out the link below or go to our website, bronsonequity.com. You can look at our deals, you can join, we can start a relationship with you and present upcoming deals to you. But what I want to know from you in this interview, what was the biggest takeaway from you? Are you going to join Rick on his new banking venture and become a client of his? What are ways that you are preparing for what's to come? Are you storing cash? Are you taking out more debt? What is it you're doing? So stick that in the comments below. It'll really help our community. I look forward to seeing you on the next video.